We will start with a closed discussion up here, but if you have questions, we will take 10 to 15 minutes at the end of the panel, and you will have time to ask your questions, of course. Having an Austrian entrepreneur on the panel, I would like to start with Eric. We have currently roughly 600, 700 crypto exchanges in the world with roughly 2,000 coins listed. Obviously, when you started, there weren't that many. But what was your intention or your reason? Where did you see the gap? Why did you start from your, I think, first brokerage business to an exchange business?
So the question is why we did the exchange now?
Yeah.
Okay. So I see the exchanges in the same way as I see the coins. If you have thousands of coins, in the end, I don't know how many will survive. Most of them are kind of useless and copycats, and same with the exchanges. So I would say more than 90% of the exchanges existing will not be there in 5 years anymore. So, in the end, we are building an ecosystem, and we started with the fiat on-ramping to crypto and make it as easy as possible to buy for, let's say, the mainstream retail users. And then now we're having a bit more than 1 million customers, and now we are, not now, 2 years ago, we started to come up with the idea that an exchange might be a good idea, because this is one part to have the retail, but now you should go to the professional investors and traders as well to actually have everybody on your platform. So, yeah.
So, obviously, as you are relatively young, you are still, compared to the big players in the market, a small exchange. So how do you plan to come up to them? What is the strategy?
I mean, the broker is quite big. I think we're the biggest broker in Europe, but like the exchange started in August. I mean, to have decent volume takes at least 6 to 9 months to actually have a volume over 10 million on a daily basis. And then it's completely different. You can't do that much marketing. It doesn't really make sense to do a marketing for an exchange. You have to go more for events, go for the professional traders, for the funds. They need the onboarding, they need to switch, and that takes a lot of time.
So, thank you. Jovan, are you afraid of the young, smaller exchanges coming up to the big ones like OKCoin?
Maybe if they pass the microphone.
Yeah, you have to.
Sorry. That's a good tactic right there. You know, in relation to what Eric said, I fully agree. We're one of the players that's been around since the very early days. So if I can take you guys back for a second, we've started in 2013. I think only Kraken and maybe Coinbase out of the exchanges today were there at that time. So we've seen the swings in the market. We've seen all the patterns that there are. But we are aware that this is a very dynamic market, and that, as Eric said, from 90 we will probably have, I don't know, maybe less than 10 very soon. So only the exchanges with the right product, with great market depth, with a lot of users and tailored services for institutional investors will eventually survive. So, you know, keeping all that in mind, we're aware that there are many new players popping up. But we're, at the end of the day, focused on improving our user experience and being compliant with regulations across the world.
Oh, one more thing. I forgot one more thing. Licensing is a very, very important thing if you tackle professional traders. Because, if, for example, if you have a fund, they just cannot send their money just from the internal policies to somewhere abroad, to a Cayman Island, whatever, bank account. They just cannot, even if they want to. So you need proper regulation in Europe, and for example in Europe now. And this is why I said most of them will never have the setup to actually get this. So
Jovan, as you're very established, I think one of the biggest, if not the biggest Bitcoin exchange in the world right now, how much, can you give us a rough estimate, how much comes from big institutional clients of the volume and how much is just retail?
It's hard to say. Obviously, our services are tailored to both. We didn't really follow the Bitpanda model or Coinbase model from early on. We have a robust platform that's suited for both retail investors and institutional investors. Obviously, given current market conditions, there would be more institutional investors that are trading because they see opportunities for arbitrage, while on the retail side, it's really kind of, it's all about whether the price goes up and how fast does it go up. If your friend is buying Bitcoin and he made a profit, then he told his friend, and this is where the retail market kind of picks up. So to answer your question, I think the majority, hard to say exactly the number, but I think today the market is dominated by institutional players.
Anatoliy, so you are from a big brokerage firm. What criteria must an exchange fulfill that you think about trading there or using it as a trading platform?
Yeah, awesome question. I remember when it all began, at least for us at Exante in 2012, 2013, there was just empty GOX in Japan and maybe like BitInstant in the States for smaller amounts, and maybe Bitstamp was beginning, and there was Bitcoinica in Hong Kong, if anybody remembers, which went down remarkably. So we wanted to buy Bitcoins, but as Eric said, we couldn't just send money somewhere. It was like really insane. There was a demand already, institutional demand, but there was no way to fulfill it. So we had to travel to Japan to actually meet MTGOX guys, Mark Karpeles and Ganzage Bushri, and speak with them and try to figure out. And we weren't that much happy with what we saw, but we wanted to buy these digital currencies to get into the game. So we wired the money to their bank anyways, and it worked well for us. In the end, we didn't lose any money with MTGOX. But exactly, as a buy side, we score exchanges very thoroughly. Of all, what you mentioned, 200 exchanges currently, I'd say a couple dozen have real volumes. And I hope like OKCoin and Bitpanda like do have real volumes. But I mean, every exchange on CoinMarketCap you see, especially if you sort by volume in top 50, is completely fake. Just forget about it. So anyone who trades actually day to day knows it as good as I do. There's no dispute about that in the community. Everybody knows it. So just forget CoinMarketCap and evaluate each exchange on its own merits. And obviously, regulation helps with that, because OKCoin now in Europe, in Malta, and in the States, and Bitpanda in Austria, definitely gives a buy-side guy like me much more comfort than like exchange with huge volumes but based out of nowhere, with no regulation, no transparency, no nothing, no audit, no nothing. That's like all these 200 exchanges, 300, they're useless for our purposes. That's the landscape. 2000 is, and again, everybody knows them. There's no dispute about that, knows where actual volumes happen.
Thank you. Talking about jurisdiction and regulation, I mean, Malta is obviously a very known country. Austria is starting about it. Sorry again, but Eric, why did you choose Austria? It's not the usual choice to set up.
Convenience? No, at the beginning it was 2013. We were all living in Austria, and at this time it didn't matter where you start, because no one had a clue, there was no regulation, and we could have started the same business in Spain. It would be exactly the same thing. And after a time, what we did quite well, I would say it was a good decision to go very openly to the regulators and talk to them about everything we're doing. Although they are not responsible for us, they also made their learnings from us. We learned from them, and so on. So it was never a black box, really. And then after a time, you realize, oh, okay, the company is now profitable, and now you're in Austria and you pay a ton of tax. Probably not the best idea to be here, but now it's too late. No, I'm just kidding. It's actually really good, and we made over all the years a very good relationship, politicians, and of course the regulator, and then you don't start over somewhere else. So far, we got quite a lot of support here, or they let us alone. Sometimes it's even better to don't get support and just be let alone. Yeah, so and this is why it's Austria and will stay Austria.
Perfect. If you're unhappy, come to Liechtenstein.
Yeah.
Good. I want to stick a little bit on the topic of liquidity, because obviously this is the thing which makes an exchange valuable, if you can trade there, obviously. You already said a lot about wash trading, fake volume. Can you give us, apart from regulation, an idea what you as a brokerage firm, but also then the exchanges, I would like to hear their answer. What can we do about transparency? What would be a best practice approach? What would make you safe in investments?
Yeah, that's an easy one. I guess the only answer going forward in like 5-10 years time is decentralization, and we need to move away from custodial exchanges. Sorry guys, so you'll need to adapt actually. I hope in 10 years time the idea to give custody of your digital assets to someone, to give full control of your savings like or whatever to some third party based just on the rule of law would be not enough. So we probably need to pay more attention to decentralized exchanges and solve their problems, which is like low liquidity, slow speed, potential minor front running, maybe not necessarily on Ethereum blockchain because there are like competitors now. So that's my answer. Decentralization, which will, like Bitcoin did, hopefully save us from these risks.
Yeah, the idea is super nice, and I love that. And the idea 2 years ago was, but do we build a decentralized exchange or not? And we realized no, because that will never happen. For a very good reason, the regulator will never allow this to become really true. In January, Europe-wide or EU-wide, AML5 will take place, and the regulation goes much more for crypto into the field what it is now with securities or with money in general. And then there is, in my opinion, no chance that you can have a business or let's say a decentralized exchange. Only if it's completely anonymous, but they will just forbid it. They won't even let you, the fiat on-ramping will not working anymore, or the money flow towards the decentralized exchanges will not work anymore then, especially not in Europe then.
Although I slightly concur with Anatoliy and Eric said regarding DEXs, I tend to disagree a little bit about the importance of self-custody. I think at the end of the day, the average investor is just worried and concerned about liquidity. And whether he or she can go on the exchange, place an order, pass KYC very fast, deposit the funds, and the trade gets filled in a matter of seconds. I think that's the most important thing for most investors. And I think even early on, I mean, this might sound crazy, but a lot of investors and a lot of retail users have assigned a certain level of probability that a lot of these exchanges are not really technically safe. The custody is a little clinky, but they know they open accounts with 10 exchanges and they, at the end of the day, bet on the ones that they have the most faith in.
Also, maybe unpopular opinion, but let's talk about more on the fiat or traditional money field. People in general, or the mainstream average user, is afraid of handling their own money. So why we have the money in the bank is we do not have, or we're not responsible ourselves for it. So imagine you would have all your euros by yourself. Many people would probably not sleep very well, and you have to take care of it on your own. So crypto is very niche product still, and they are very tech-savvy people. And I'm completely fine with handling my own funds, but if this ever, like digital assets will become more mainstream, I don't think most people would like to have the responsibility of being responsible for their own funds.
But this does not necessarily mean that the funds have to be held by the exchange, right?
No, absolutely not. And they're already starting with licensed custodian models, and there are big players already offering custodian services. They are currently just focusing on institutional customers and not on retail customers, plus it's very expensive.
Another aspect of liquidity, of course, on traditional financial markets, you have market makers. So people driving the market, providing liquidity. This is obviously not so needed if you have already a liquid market, but on those which are just on the edge, it would be very helpful. On your exchanges, the first question is, are there any professional market makers already trading? And the second one is, have you thought about something like automated market maker mechanisms? So like,
shall I start? I mean, everybody should. Yeah, no, everybody should take this, I think, because I'm interested in your how you're doing it. So so for the start, if you build a completely new exchange, you cannot expect volume from the first day. That's clear, and you cannot have volume if you don't have liquidity in the order book. So we are paying professional market makers to have a liquid order book, so people can actually trade if they want. So because it's like chicken egg. Yeah, this is why I have the power over the microphone. So no, it's first liquidity. Liquidity is the absolute base, and there are a lot of different companies around the world, really professional market makers that are not only in the crypto space but offering this for traditional or stocks or financial markets, and they are now also offering crypto market making.
Yeah, in addition to the chicken and eggs situation, I think it's very similar to traditional financial markets. You need to have market depth. You need to have the ability to fill the orders of your clients in a matter of seconds. And this is what, at the end of the day, is your competitive advantage as an exchange, as a marketplace, as a place where buyers meet sellers. So in order to facilitate that, you obviously need support from market makers. No shame in that. So.
No, of course not. But in terms of automated market makers, anything up the road? So like an algo market maker?
I mean, there's a lot of market makers that have different strategies. There's a lot of market makers that implement different algorithmic trading models. If your question is, do we have our own market maker that's basing their strategies on algorithms? The answer is no. But there are a lot of market makers out there that have similar structure in place.
Thank you. Maybe also interesting for a lot of people in the audience is, what are the criteria? When do you list a coin? Except from paying the fee.
I have the microphone power now, so I'll take. And I can speak only for OKCoin. We do not have a listing fee. We're not pursuing any type of project that resembles projects during the ICO craze. I think we look at we have a designated team of people that look into this. So there's 40 people that are. Their only duty is to research tokens, research projects based on interest, and evaluate the white papers, evaluate the credibility of people that are running those projects. Have these people been building companies in the past? If so, successful or not? And ultimately, does a token or a project solve a real-world issue? Is there, utility behind it? So a combination of these factors kind of determine whether the project is a good fit or not.
All right. So no listing fee or something. We're not Binance, so we do proper business. Although I'm jealous about their volume, and. So what else I wanted to say about this? So we have only top 30 coins right now, or nearly all top 30 coins. 100% not Bitcoin VS or all the other scam coins or something like this. So this will never happen. So we have like a quality criteria, but you need markets that are very liquid. You need other exchanges where it's proven that there's decent volume, that people are actually trading this, a decent community is behind it, and it's not just a bandwagon project like in late 2017 where every week something pops up. So it's a lot of research as well, plus something that is already established.
Thank you.
I can. From the buy side, I don't have a token to list, but we were invested in some project that we're trying and successfully to get listed on some exchanges over the course of the last, say, 3 years. And I think that's a great differentiator right now. If an exchange approaches you and actively solicits listing, like asking for a fee, you shouldn't probably do it. Like if it's a proper exchange, if even Bitfinex, even Binance, and like definitely OKCoin and Bitpanda, they're not gonna list you just for the fee. And in fact, if they like the project and feel that it will bring volumes and liquidity, they will list it without a fee. And I know it for a fact, like firsthand. Yeah, that happens. So any exchange that is still in business of getting fees for listings should clearly be avoided. That's really easy distinction these days in 2019.
Thank you. So leaving liquidity and coming to another topic, maybe also important, very current financial derivatives on cryptocurrencies are coming up on exchanges, right? So obviously derivatives are used for three things. Two of them are good for the market and one is not bad, but risky, obviously. So arbitrage and hedging is good, but speculation can be good and bad. So how do you think about introduction of derivatives? And I will bring two counter arguments. One I've already said is it might increase speculation even more. And the other is obviously when you have something like futures, this takes away even more trading volume from the underlying. I mean, you can now buy a Bitcoin on the future or you can just buy a Bitcoin. But you don't do both at the same time. Maybe Jovan, you just start. How do you think about derivatives, especially in the short run? I know it's an unusual question, but yeah.
Yeah, sure. I love derivatives. My trading career started in 2007. We traded derivatives. Even before cryptos existed, we traded regular markets. So when CME, actually CBOE first listed Bitcoin futures, end of 2017, we were among the first firms to actually place trades. I remember that night, like from Sunday to Monday, right? Everybody was super pumped, super excited. Bitcoin was reaching all-time highs. And then, like, we all know how it ended. Nevertheless, I do not believe that there is such a thing as a negative speculation. I think when someone has a skin in the game and puts an order in a public order book and puts his or her money at risk, that cannot be negative. Like he might win or lose, he might get money or lose money, but that's not a negative. That's a totally always positive for a society because we get new information about it. It helps price discovery, and it shows that like what's the current best estimate worldwide of the, say, Bitcoin price. So short-term and long-term derivatives are super useful.
But derivatives also have the potential to destabilize markets. I think Volkswagen would disagree with you. Therefore, I'm not so sure if it's always positive. But
yeah, but look what happened. Volkswagen tried to, like Porsche tried to take over Volkswagen, right? If I remember correctly. And how it ended? The company that was smarter ended up winning. So you cannot defy the laws of physics or society or whatever just with derivatives. It's just a tool. Like they tried, they failed, and they lost.
What do the exchanges think about that? Are you planning to introduce derivatives?
Derivatives are usually bigger than the underlying market anyway. I mean, that's not a topic really of crypto or anything. This is a topic of should the derivative market be, let's say, reformed or not in general. Derivatives, they don't care what's the underlying. So we cannot really influence this at all.
Are you planning to trade them?
Currently not. Currently we have a lot to do with the spot market anyway.
Okay.
So.
No.
Thank you. Another topic I want to talk about with you is, and this is a little bit away, but you're very close to currency. At the first panel today, the discussion that a lot of coins will go away. You also said a lot of coins will go away. And we saw over the last weeks that the Facebook Libra project has problems. Bitcoin doesn't take off really strong over the last 10 years. What do you see? What is the future of the cryptocurrencies? Are we seeing more than 5 in 10 years? Or so really of the currencies, not tokens?
From a person that operates an exchange perspective, I would say increasing crypto adoption. So bringing digital assets closer to people, educating them, making it easy for them to own one, and having more utility. From a personal perspective, I want to say mass Bitcoin adoption.
I see that to bring a buzzword in, tokenization will take place of many different kind of assets. So for example, I'm pretty sure that stocks will also be fractionally traded or in token form. So I think there will all kind of assets be traded on several exchanges. What was the initial question, by the way?
Yeah, I was more focusing on the currency type tokens or coins, not the assets.
Yeah. Stable coins is something what I really see as a really striving topic. But also, I already said several years ago that one day we will see also the ECB launching their own euro token, whatever this is. It's not a cryptocurrency, it's 100% not decentralized, but you see it now with China. China said it's already ready. Libra is, I think, a fantastic project because this will help. It won't have the biggest impact on the Western world, where we have a working financial digital banking solution for everyone, but especially for people with unstable currency, or they don't really have access to financial services or the market in general, or the remittance market is just getting all of their money pretty much. For them, Libra is just perfect, and because it's more, I describe it more as an ETF coin. So it's a basket of different currencies, for example, and bonds. So I think it's a great thing to actually own this. I would own it myself a lot. So
I think maybe I have a bit different perspective as being sort of maybe more maximalist. I think we're seeing this year already with the Libra and Gram and how regulators treat them, which I think they don't treat them nicely at all. We're seeing that maybe, and that's my opinion, maybe we'll see that proof of stake projects, doesn't matter, delegated, direct, doesn't matter, proof of stake projects, which are trying to present themselves as decentralized, will not be treated as such. And that means that going forward, maybe, again, my opinion, only proof of work projects which are truly decentralized will survive, which bring us to Bitcoin, obviously, and some would argue that Bitcoin would be sufficient for 99.9 use cases, like with side chains, with atomic swaps, with whatever. We have Monero, Zcash, Dash, we have Sia coin, we have Litecoin, like maybe a handful of proof of work projects. Proof of work is expensive in a sense. You have inflation to pay the miners, and that brings the price down. You cannot just issue 1 million tokens, sell one for 1,000 euros, and claim you're a billionaire. Like, it doesn't work with proof of work. Sorry, you have to actually bring some value to the table to convince people to use your coin with a built-in inflation. And my opinion, proof of work is the way to go. And that's why in my portfolio, I mostly hold like 99% proof of work coins only.
Okay. So another topic which might be interesting is there are several studies out there, and we had a little bit of this before, saying, I don't know who said it, one of you guys in the back, that people don't like to hold their own money, or they don't want to do their financial business on their own. I mean, that's the models of banks since 200 years, right? Basically, you could lend money to someone else, also rather riskless, but you just don't do it. You go to your bank advisor and ask him what to do. Mostly he doesn't know better. But the other question is, if we send people, like really retail clients now, directly to an exchange, and we admit them, we do KYC, and they only do it with small money, but are we sure that they are financially literate enough to do that? Or do we need to protect them in some way?
Yeah, guys, I'll pass the mic, but it's easier for me to comment as I don't run an exchange and I don't rub myself against regulators, right? And I'm quite a libertarian type, so no, we shouldn't protect anyone from making mistakes or making profits. That's up to them.
Thanks, Eric. I'm also going to speak again on behalf of OKCoin. It's like when you download a product and then you scroll down the terms and you click on agree and then you sometimes get surprised. If you sign up for an account on OKCoin, there is a little box that says, I have read and understood the terms of service, the risk and compliance disclosure, and the privacy policy. So if a particular client is keen to be educated on the risks associated with trading on our exchange, he or she has the ability to do so. Simple.
If I just compare buying, for example, on our broker service Bitcoin to going to a bank advisor and asking them, what do I do with 5,000 euro? 100% this should be avoided at any time because it's super untransparent. Then you sometimes have an actively managed fund that is putting money into another actively managed fund and you're just like getting ripped off completely. So this is why I always say bank advisor is not a bank advisor, it's a salesman. And also, where do you draw the line? What is allowed then? Is it, do we have to do an IQ test now to actually allow people to, you know, but I mean, if you're 18, try your luck. But in general, we should teach at school different things. For example, fund management, being responsible, long-term thinking, and so on. So I think this is a general mindset that should be taught at school about taxes and so on, and in general what to do with money, how interest and so on work, how the financial market and the stocks market work. So this should be done at school, the basic form of it, and I think you should always only buy things you understand fully. This is why I think bank advisors shouldn't exist anymore.
Good, thank you. I think we now have time for questions from the audience. If you have a question, please raise your hand. There's one in the back here.
Not if you're a bank advisor, otherwise I take your question.
My question goes to people now calling for a digital euro. I don't like, what is your opinion on it? For me, the euro is already a digital currency, and the US dollar as well, because how much money that we actually have is printed. So all companies are basically using digital money, digital currencies. I mean, it's not decentralized and it's not a cryptographic currency, but like, what is your opinion on that in terms of, do we really need a digital euro? Since Libra would be a global currency that enables everybody, and digital euro or digital USD, I mean, basically we already have it, in my opinion.
I would just answer first. For me, a digital euro, let's say a euro token that doesn't exist yet, would be just another form. So before we had coins and then paper and then credit cards and so on. It's more digital. Now you just have some numbers in your app. And this would be the next form which you can just carry around more easily and just transfer it faster. But that doesn't really change the money itself. Libra is a different thing. It's not really money. It actually consists, or everything inside Libra is money. And the only difference is that the money that is just printed kind of randomly, I know then there will be a balance sheet and so on. But if the economy goes down, then if the national bank buys corporate bonds, it doesn't really make a difference. But Libra is backed, for example, 100%. So every dollar you put in, there is a $1 inside. So this is fundamentally different to currency itself, but Libra consists of currencies. So I can't really give you a clear answer because a digital token of a euro is just another form of it. It's just the evolution of money itself, but it doesn't really change the what is inside the euro itself, if that makes sense.
Yeah, I agree also. Digital euro, like if it's just a token issued by ECB, there's probably no need for that because it's not a new credit being created. It's just a representation of an existing credit, and money is credit, right? So, but Bitcoin is a form of money, obviously. Something new is created, so that's completely different.
I think one big difference, I will say it the other way around. There's no big difference if you have a standard euro and a digital euro and they are one-on-one. Once you only have the digital euro, it becomes very interesting from the economic side. Because think, for example, of negative interest rates. Right now, for the euro under your pillar, which you can always take from your bank account, basically, nobody can get interest rates from you, from this euro. Once you only have a digital euro, it's very easy. It's basically some lines of code to have negative interest rates on all types of euros. So I think the big difference between a real digital currency would be that in the end you have some, and I know this sounds weird, some centralized via the coding access to the currency, and you can control it via that. If you want that or not, this is a very different discussion. Any other questions? So one arm over there.
Yeah,
Yeah.
here I have the mic. Yeah, thank you. So one question for the exchanges. You are working now in an unregulated environment still, yeah? Can you estimate how much from your volumes until now was used for money laundering?
So we have received the PSD2 license in March. And the thing is, I think even in 2014, when we started from the beginning, we did the KYC in banking standard, although we didn't need to. We still don't have to do it. In January, everybody has to. But for us, nothing changes because we're doing this for years. So I would say if everybody wants to do money laundry on Bitpanda, that would be ridiculously stupid. I mean, because you have to fully KYC. There are still other exchanges around to do this.
I guess I should answer, yeah. I mean, in your question, you said that we operate in unregulated markets. I guess, not everyone does their due diligence before a panel. We're licensed by FinCEN in the United States. We're currently also under a transitory provision by the Maltese MFSA. All of that, enforces us to be compliant with the local regulations and have strict AML and compliance programs in place. On top of that, as Eric said, we do full KYC verification on all of our clients. So I think that should probably answer it.
Other questions currently? I would have a very, very last question. Maybe Jovan, you start. OKCoin and OKX, you kind of split the business. And as far as I understood, into a fiat crypto and a crypto business. Do you think that, so what was the reason for that? That's the first thing. And the other thing is, do you think that this is the way to go to have more specialized exchanges? Or do you think that one big exchange doing all the stuff is the way to go?
Good question. I think this is the common misconception in the wider crypto / blockchain sphere or space, is that OKCoin equals OKX. The two are completely separate exchanges. They have separate liquidity pools. Truth is, OKEX did emerge last year when OKX was also operational. However, OKX is only focused on the pure crypto side as well as the derivatives. Because at that time, we foresaw that there's a huge probably demand for purely crypto-based products. But the intention is to treat those two completely separate and have separate strategies, a separate market segment, and a separate target customer.
So the idea is exactly to specialize on the markets.
Well, yeah, I mean, I can't answer because the two companies are different, so I can't right now speak on behalf of OKX. The strategy for OKCoin, at least, is to be fully compliant with every jurisdiction that it operates in, have solid banking partnerships to allow smooth deposits, of course, and remain competitive in the fiat crypto on-ramps and off-ramps.
Okay, thank you. So Eric, I think you offer both, so fiat and crypto pairs, right?
Yeah.
Are you planning to go on with that, or where do you see the future?
So I can just let me say translate the answer. It's the same what Binance does. If you just have crypto, you're fine. You know, for most parts of the world, you can pretty much do whatever you want. If I would have the same size as Binance, for example, then I would do the same. Then I would say, okay, let's do a new entity and try to tackle the euro market or the fiat market. But we keep it completely separate because we don't want the regulator to touch our business, because then our volume just goes. And so we don't have this from the beginning. We put everything together. This is what I said before, ecosystem. And you can just switch from your broker account, from your platform to the exchange, trade there and so on. So it's relatively similar to what Coinbase does very well in the US.
Thank you. Want to add?
I also have a perspective. Again, might be easier for me to speak as I not running an exchange actively. It looks like that this setup, when there's an unregulated crypto-to-crypto exchange and a very regulated, or like to the extent possible, sort of exchange where you can buy cryptos with euros or USD or whatever, I think it also might end, because the regulators will see that it works like this. You send euros to a regulated exchange, you buy Bitcoin or Monero or whatever, transfer to unregulated, and you lose it all like scalping shitcoins or whatever. So they're like separated, but that doesn't help to achieve the goals regulators might have in mind. Like the setup is totally fine with me, obviously, but for the regulator, it doesn't matter if like the guy can enter this unregulated exchange, while a regulated one, they're not going to be happy. So let's see how it works out.
Thank you. So I think our time is roughly over. Thank you for your participants on the panel, and I give to Holly.
Great. Thank you so much, gentlemen.